Okay, so now let's resume from where we left in the last revision session. So welcome to our third revision session. Today is our third revision session. So that's 3 out of 5. So it means after today we are left with 2 more sessions, and it is my hope and belief that after the 5th session you'll be ready to write. So in the last session, on section A of this question paper, I just want us to finish up section B, and if time allows, we go into another different question paper. So an organization can adopt, I just confirm those online, can you hear me well? Is my sound audible, and can you see my screen? Okay, someone is confirming there. So it's fine. So let's look at the first question. An organization can adopt one of a number of different boundaryless structures. So remember the boundaryless structures, these link the organization with the external environment. So the organization can actually be linked or connected with the external environment. So we're not just looking at the internal structures. So the organization can be linked with its suppliers. It can be linked with other firms through outsourcing. So there are different organizational, boundaryless structures. So the first one is the hollow structure. We have the virtual structure. We have the modular structure. So maybe before we go to the questions, the drop-down questions there, we can quickly recap on those structures. So let's start with the hollow structure. Let me quickly open the Word document we have been using. Okay, so on the boundaryless structures, so boundaryless structures. So on these boundaryless structures, the first structure we have is, we can talk about the hollow structure. We have the visual structure. And we have the modular structure. So if the organization is operating using the hollow structure, this is a structure where if it's the hollow structure, it means the organization has broken down its operations into 2. So they have operations that they call, these are the main or the core activities of the business. So the organization breaks down its operations into core and non-core activities. So under this structure, the operations of the business are broken down into core and non-core activities. Core and non-core activities. So what we do as a business, we break it down into core and non-core activities. Then for those activities, which we say these are our core activities, or these are our main activities, for the core activities, we are going to do them in-house. So we consider what is it that really brings customers to our organization. So that which we are known for, that which is the reason behind our existence, we do it in-house. So the core activities are done in-house. Then for the non-core activities, so we can be having other activities which are not the key to our operations. So for the non-core activities, we can choose to outsource the non-core activities. So let's think of labels. Or whenever you hear labels, you think of bread. So they can say bread is their core activity. Then if it is producing bread, they always produce in-house. Then for the non-core activities, we outsource. So non-core activities, we outsource. So the non-core activities, we outsource. So the core activities are done in-house, and non-core activities. Non-core activities are outsourced. The core activities are done in-house, and non-core activities are outsourced. The core activities are done in-house, and the non-core activities are outsourced. So that is if the organization is using the hollow structure. For the core activities, they make sure to do these ones in-house. Then the non-core activities, if pressure mounts, we can outsource the non-core activities. Then we can have the virtual structure. So if the organization is a virtual structure, normally most of the activities are done, are outsourced rather. So the organization can simply exist as a network of activities. It's just an organization that's not producing anything. It's just buying from somewhere and selling to someone. So the organization exists as a network of activities. As a network of activities. So this means that the organization just connects the person that is buying and the one that is selling. Sometimes they might not even have their production site. So they're just there, or they just operate an office, and the rest of the things are outsourced. They are not done in-house. So it means the core and non-core activities are outsourced. So they outsource both the core and non-core. And non-core activities. So we outsource both the core and the non-core activities. Then we have the modular structure. So for the modular structure, what we do is we break down our operations into components or into modules. So the operations of the business are broken down into components or modules. So we break down the operations into components or modules. Let's think of when you are producing a car. We are going to need wheels, we are going to need the glass, we are going to need, so we can break that production into different components. Then we choose to produce some of the components, and we choose to outsource some of the components. So after we've broken down the production into different components or modules, any of the components can be outsourced. Any of the components can be outsourced. Any of the components can be outsourced. So we've broken down the operations into components, of which any of the components can be outsourced. Then now with that in mind, let's go and look at the questions now. So we've recapped that. Now let's look at the questions. So we have Cases 1 to 4. Now I want your contributions. So with cases 1 to 4, you have to pick whether each case relates to a hollow structure, a virtual structure, or a modular structure. So we can even have more than, it can be used more than once. So it means the first one can be hollow structure, the second one can still be hollow structure. So what's your take on the first one? Company U has recently outsourced many of its activities, third-party suppliers, many of its activities. However, it has kept customer service in-house as it feels this is a core business area. So what can we say about item 1? Does that indicate a hollow structure, visual structure, or modular? Could I saying A? Others, what are you saying? Coletta is also agreeing to A, the hollow structure. Yes, because we have kept the core activities in-house. That makes it the hollow structure. Because we've kept the core activities in-house, it means that's the hollow structure. Then we move on to the second one. Company H only has a small central staff who coordinates the company's outsourcing functions. Company H has a small central staff who coordinates the company's outsourcing functions. So it means the company is outsourcing, but however, they have a small central staff. So what can we say about this company, Company H? Which structure is it closely related to? Coletta is saying the visual structure. Could I kindly turn off your mic?
Okay, sir.
Okay, so the visual structure, yes, because this one is simply existing to outsource, though there's a central department that is just facilitating the outsourcing function. So remember, if it's the visual structure, the organization is just a network of activities. So we're just connecting the buyer and the seller. We might not even have our production sites. That's why we just have a small central department, which is there to just make sure the orders have been delivered, but without anything that we might be physically producing. Then company G makes computers, but outsources the production of their screens to third-party suppliers based in a lower labor country. So they are making computers, but they are outsourcing the screens for the computers. What can we say about this? Which structure does this show? Coletta is, could I saying C? Which structure is this? Others, what's your take on this one? Coletta is saying C as well, and I do agree with you. This one is the modular. So the modular structure, we say that we break down the production into modules or components. Then any of the components can be outsourced. And I gave the example of the car industry, and this actually mimics the example that I gave where I was saying we can outsource we break it into different components such as glasses, and you then outsource any. So that's the modular structure. Then we have company B has outsourced all of its major functions, including IT, which the directors believe give the company competitive advantage. Which one is this one? What can we say about this company B? They've outsourced all of its major functions, including IT, which the company believes which the directors believe give the company competitive advantage. Could I say B? What about others? And B is correct indeed, because the virtual structure is the one that outsources almost everything. So company B is outsourcing all of its major functions. So it becomes a virtual structure. So if we are outsourcing all of our main activities, then it becomes the virtual structure. Now let's move on to the next question. The structure of an organization can be described using a number of key terms. So we have what we call the chain of command, the span of control. Then we can have a flat in the tall organization. So we can have, let's have those terms that we come across in organizations. So we have this span of control. So with the span of control, chain of command, with the span of control, the chain of command. So the span of control, the chain of command, we have a tall and wide structure. Now, let's separate that with a tall organizational structure. And we have a wide or a flat. So the first one, the span of control. If you are a manager and you are leading a number of subordinates, the number of subordinates that are reporting directly to you, that's your span of control. How many people are reporting to you directly? That's your span of control. So the span of control looks at the number of subordinates directly reporting to a superior. So this is the number of subordinates directly reporting to a superior. So the number of subordinates directly reporting to a superior, that is the span of control. So if you are a manager and there are 10 people who are reporting to you, then the span of control is 10. So the span of control is the number of people directly reporting to a manager. So the span of control is the number of subordinates directly reporting to a manager. So take note of the term directly. So span of control is those that are reporting to you directly. So if you are the boss and below you there is another boss, we are looking at how many people are directly reporting to you, not everyone who is under you. So that's the span of control. The chain of command, this is the channel in which messages move until they reach the final person. So this looks at the channel in which the messages move. Before reaching the final person. So if we send a message, how many people have to hear this message before it reaches the final person? The channel in which the messages move before they get to the final person. The channel in which the messages move before they reach the final person. That's the chain of command. A long chain has a problem because messages end up getting distorted. The message reaches the final person distorted. The final person won't hear exactly what they were supposed to hear, because along the channel, there can be additions and subtractions to that message. So the final person might not hear the message the same way as it was initially. So we should all try to maintain a short chain of command, because once the message passes through a lot of people, there's a high risk that it might be manipulated. Then now let's move on. So the organization, if the organization has a tall structure, a tall organizational structure, what does this one mean? A tall organizational structure actually means the organization, if it's a tall organizational structure, it means the organization has a lot of hierarchies. So there are a lot of levels. So we have a lot of managerial levels within the organization. So a tall structure is associated with a long chain of command. So this is associated with a long chain of command. Long chain of command. This is associated with a long chain of command. A tall structure means messages have to pass, or we can say they are a lot of hierarchical levels. Or management levels. Then besides a tall structure, we have a wide or flat structure. So if the structure is wide, it means the boss, and also maybe on the tall structure. A tall structure, it means the manager has less people under them. So there is a narrow span of control. Narrow span of control. So if it's a tall structure, the manager normally manages a small group of people. There is a narrow span of control. Then if the structure is wide, wide now is the opposite. There is a short chain. If we maintain a wide span, normally it results in a short chain of command. Besides short chain of command, less hierarchical levels, less levels of management. Besides that, there is a wide span of control. The manager manages a lot of people. They get responses from a lot of people. Wide span of control. So these are characteristics of if it is a wide, these are characteristics of if the organizational structure is wide. Now, let's move on. Now, let's get to the question. And so the question is saying, the following sentences contains verbs which specify a particular structural term. I's business is dash, as all employees report to him directly. There are no other managers within the business. So what can we say about I's business? It's flat. So if it's flat, it means that they are less managerial levels. So that one is a flat structure. Then Q private limited company is divided into divisions. Each division is controlled by 3 managers, each of whom have large number of staff reporting to them. Large number of staff reporting to them. These managers have complained that the wide dash means that they have too little time to look after the individual staff members. Is the wide what? They are complaining about the wide what? Each division is controlled by 3 managers, each whom have a large number of staff reporting to them. These managers have complained that the wide dash means that they have little time to look after individual staff members. It's wide span of control, yes, because the span of control is the number of subordinates reporting to the manager. So if they have a wide span, they have a lot of people reporting to them. So it's the wide span of control. Is the wide span of control. So now let's get moving. Professional accountants must follow a number of fundamental ethical principles when undertaking their work. These include, we have objectivity, confidentiality, integrity, professional competence. Let's again go to our Word document and summarize those. So the professional ethics. So for professional ethics, we are supposed to be guided by objectivity. We are supposed to be governed by, so we have objectivity, we have integrity, besides integrity, we have confidentiality, we have professional competence. So we have professional competence. So professional competence, sorry, let me just try. Okay, so these are the principles that are supposed to be governing, these are the principles that are supposed to be governing professional members. So being governed by objectivity, what duty is this one? So objectivity, this is a duty to avoid self-interest. You are not supposed to put yourself in a position where you benefit, but at the expense of the company. So this one, as an accountant, as a professional member, you have a duty to avoid conflict of interest. So you are not supposed to engage in activities that are going to make you benefit, but putting the company in danger. So a duty to avoid conflict of interest, it means that you should not, your interest must not prevail over the interests of the company. Don't engage in activities that are benefiting you, but putting the company in danger. Integrity is behaving with honesty. If you are a professional member, you are supposed to be honest. So a professional member must behave with integrity. So having integrity, it means being honest in your conduct. So behaving with integrity, it means you are being honest in your conduct. You are being honest in your conduct. That's having integrity. That's being honest in your conduct. Then we have confidentiality. If you are applying confidentiality, it means that you are not disclosing information that you obtain. When you are acting as an accountant or auditor of the company, you come across information that is confidential, that the competitors might want, that they might actually request you to give them. So confidentiality is having a duty not to disclose information that you have not been given the authority to disclose. So the duty not to disclose information without approval. So as we come across sensitive information of the company, we should not disclose unless if it is a requirement by the law. Maybe the company and you have the details of it's like Econet. Or any network providers, they have even the bank, they have your details, they know where you stay. So if you are maybe you've committed a crime and they are looking for you, the bank can, under that circumstance, release information. Econet can, under that situation, release information. Even you as an accountant, if the information is being required, and because in connection with a crime that has been committed and the information is being required by the courts, you can breach that duty of confidentiality. So then the last one is professional competence. So professional competence is accepting a responsibility that you know you have the skills to handle. So as a professional, you accept a responsibility provided you have the skills required. You accept a responsibility provided you have enough skills required to partake of that responsibility. With that in mind, let's apply it to the cases 1 to 4. So which principle is associated with the mentioned? Number 1, which one is it? Yes, number 1, that's confidentiality. Information obtained through an accountant's work should not be used for personal advantage. You should keep that information a secret. So releasing that information, it means you are breaching confidentiality. Then item number 2, an accountant must follow all applicable technical and professional standards. So if they are doing their work, they're supposed to follow the right standards. So they are supposed to follow the right standards. What can be that? They should follow all applicable standards. Yes, Faith is saying D, and that's true. That's showing professional behavior. So if you're showing, if you're following the standard, it means you are doing the right thing. So you are recording in the right manner. What the standard is saying you should do is the way you do it. So that's showing that you are competent, you know what you are doing. So the moment you start doing what the standard does not allow you to do, it means you are not showing your competence. Let's look at the item number 3. Accountants must not produce or be associated with misleading statements. What can we say about that? That's integrity. Behaving with integrity, that's behaving with being honest. So you're supposed to behave with integrity. That's being honest in your behavior. Then lastly, professional judgment must not be compromised by bias. So I think this one goes to the odd one out, which is what? The remaining one, because so the duty to avoid bias, to take decisions that benefit you, that's objectivity. So if you are not going to be biased, you are not going to take decisions that support your self-interest. That is behaving with objectivity. So let's move to 2B. Below are a number of statements regarding approaches to ethics. So we have the approaches to ethics. Remember, an ethical behavior is a behavior which is considered as being the right way of behaving. If something is ethical, we are saying this is the right way of behaving expected of the individual. Something that is ethical is something we are regarding as being the right way of behaving. So under the ethical approaches, we have the consequentialist approach, which says that if we are determining whether something is right or wrong, we might need to consider the consequences of their actions. So it's not every action that is wrong, but we need to consider the outcome of whatever they have done. If the outcome is good, then the decision may be regarded as being ethical. Stealing in order to help those that are hungry can be regarded as being ethical. The consequentialist approach is then divided into, we have egoism and utilitarianism. So egoism is saying it's right if the person who has done it is, as long as the person who has done it looks at the situation as not being wrong, or we are saying as long as the person who has done the decision is benefiting from the decision, then if it is now utilitarianism, we say it is right if the benefits are to many people. So with that in mind, what can you say about the approaches to ethics? We also have pluralism and absolutism. Absolutism says that certain actions are either right or wrong. We can't debate on that. Such as killing someone or taking someone's life is just regarded inherently being wrong. That one we can't debate on that, according to the absolutist approach. Then the pluralist approach, if it's now the pluralist approach, we are trying to minimize the harm or damage. We want a decision that tries to balance all the sides. Now, with that in mind, can we try the question? Chi? Or the question? So I want which statements are correct. Which statements are correct? And all right, which correct statements, which are the correct statements? Let's start with A. Is A correct? An ego, we want how many? 4. An egoist considers only themselves when making the ethical decision. Yes, if it's egoism, we are saying it's right as long as the person who has made the decision sees it as being right. So egoism, we are saying it's right if the person who has made the decision sees it as being right. Then, just a moment. So let's proceed. So we have said the first one is correct. Egoism, we are saying it's right as long as the person making the decision looks at it and feels it's right. Then making decision based on the individual circumstance you find yourself in is referred to as consequentialism. No. Egoism and utilitarianism are both consequentialist approach. Yes, consequentialism can be broken down into egoism and utilitarianism. So we need 2 more. If a person only makes decisions that are for the greater good, they are a pluralist. That's egoism. Sorry, not kuti wati. Okay, egoism, the outcome, to consider the outcome. If the outcome is beneficial to one person, it's egoism. So in this case, we are not talking about the outcome, but we are saying we are making decision based on the circumstances that you are found in. So making decisions based on the circumstances you are found on is different from saying if the outcome, because the consequentialism approach looks at the outcome of the decision. To say if the outcome is a benefit to one person or is it a benefit to other people. So not about making a decision based on the circumstances you're found in, but you actually plan making the decision, but it either has an outcome which is favorable to one person or it can have an outcome favorable to many. So if it favors one person, that's egoism. If the outcome benefits a lot of people, that's utilitarianism. Then a company that tries to make decisions that avoid the harm to any stakeholder is taking the pluralist approach. E is correct. The pluralist approach, we want to reduce harm. We want to try to balance all the sides and make sure we don't harm any. If a person makes decisions that are for the greater good, the pluralist, utilitarianism believes that the ethical decisions are those that are the most practical. No. Absolutism considers their own needs. No. following an approach to ethics that sees every decision as being either right or wrong. Regarding the circumstances of absolutism, yes. So the last one is the definition of absolutism. When we make a decision, so when we have certain behaviors that inherently we say these are right and these ones are wrong, that's absolutism. So I think I now have my 4. H is qualifying as part of my 4. And also A, we have chosen A, and C and E. So if it's a company makes strides decisions that harm is taking the plural, because the pluralist approach tries to reduce harm for all the sides. So let's now move on. Within an economy, aggregate demand refers to the total demand of a country's output. The government of country G is attempting to calculate this and has identified a number of factors that might be included. So if you are calculating aggregate demand, which is the total demand, the total demand looks at the demand for, so in the aggregate demand formula, the total demand for an economy so for aggregate demand, we can look at the demand for consumer spending. There's demand for consumer spending, demand by firms for investment. We have demand for government. We can also have demand for exports. So let's go and check from the question. So which 4 of the above factors are included in calculation of aggregate demand? Aggregate demand. B is there. A is there. Then we need 2 more. H is there, demand for investment and demand for consumer spending, yes. Now let's move on to the next question. The government of country G has recently taken office and is keen to identify the best approach to managing the economy. They have been informed of 3 main approaches. They've been informed of 3 main approaches. So the classical approach says do nothing. Leave the economy to interact on its own. It will identify its equilibrium point. So leave the forces of demand and supply to interact freely. Demand side says boost demand. As the government help the people to have more money to spend. If you want to boost the economy, boost demand. Once people have more money to spend, the economy is going to be, so work on boosting demand. And demand boosts if people have more to spend. Then the supply side says, no, remove market imperfections, remove things that can prevent supply of goods. Once it's easy to supply, more firms are going to supply and the economic activity is going to boost. So that's the supply side. Then now applying that, identify which of the following policies relates to each approach of managing the economy. Number one, increase spending and run a budget deficit. We did talk about a budget deficit yesterday. So if we increase spending and run a budget deficit in order to stimulate growth, what can be that classified as? That's the demand side. The government is boosting demand. They spend more and help you to spend less. They spend more and help you spend less. Then we have item 2, eliminating the previous government legislation which created minimum wage. So this one, it has to be, we are making it, so there was a minimum wage. It means there's a factor of production which the government was controlling. So this tends to minimize supply. If the government is to intervene and put things such as minimum wages, that can restrict supply because companies will end up hiring few employees. So that one is the supply side. Then provision of information to workers about job opportunities. What is that one? So if workers have information about job opportunities, again, that's supply side because we are increasing supply of labor, which can tend to boost production. So that one is supply side. Then the last one, adopt a hands-off approach and allow the economy to naturally hit the equilibrium point. So that one is regarded as being the classical approach. So we have the Mendeleev matrix. So we have the Mendeleev matrix. So for the Mendeleev matrix, we have this quadrant A. The quadrant A, this is where we find stakeholders that have a high interest and a high power. So this matrix is used to analyze our stakeholders. So want to study the stakeholders of a business and consider which stakeholders are more important. There are those with a high interest and high power. So those that have a high interest and a high power, these are classified under A, and these are the key players. Stakeholders with high interest and high power, they are called key players. So we have to involve them in the decision-making process. Because if these ones are not happy, they can put the business in danger. So such as we have what we call institutional investors, big companies that buy shares in other companies. So those ones, they have high interest in the company and they have high power. Their decisions can affect the company. So the stakeholders that have a high interest and high power, we call them the key players. Then we have stakeholders that are classified under quadrant B. For B, they have power, but low interest. Let's think of the government. The government has power and it can cause the business to shut down at any time. But you might not even see them, a company paying, as long as you are adhering to the rules and regulations. They don't intervene in your business. So those ones with low with, oh, sorry, it's the wrong quadrant. I'm supposed to be on C here. High power but low interest. That's the government. So the government is at C there, where we have high power but low interest. So they are capable of becoming key players. These ones, we need to keep them satisfied. So if they are not satisfied, they become key players. They become interested in your business. They want to know why are you not, if you're not following the laws, they become interested in your business. They want to understand why the business is not compliant. Then we have stakeholders that we can put under this quadrant B. They have low power, but high interest. These ones, we keep them informed. These are like the community. The community wants to know what is the benefit of your business to the community? How are you benefiting the community? But they don't have power to stop the business. So they have high interest, but they have less power. So those ones are kept informed. Keep them informed. Then we have the stakeholders that have low power and low interest. Those ones, keep minimum effort on them, even ignore them. Keep minimum effort on them or even ignore them. Let's move on. Now, let's try to connect that with the question. So, for each of the following statements relating to the company W, identify which quadrant of the matrix is being referred to, writing letters A, B, C, D. So I want to see which quadrant does each statement relate to. Item number 1, W's major shareholders have stated that he is happy as long as he gets his dividend at the end of each year. He is happy as long as he gets his dividend. Coletta is saying A, high interest and high power. Is that so? He's happy as long as he gets his dividend. How many things is this shareholder interested about? He's just interested in a dividend. So since they're just interested in a dividend, it means their interest is low. They don't need a lot of things. They just stated that they just want their dividend. But in terms of power, a shareholder is power. So they have a high power, but low interest. So let's put them on C. Let's put on C, because in terms of power, since they're a shareholder, they have a high power. But they've stated that they don't have a lot of interest in the business. So these ones, they are classified as, okay, they are put in the quadrant C. W feels that one of its customers should be kept informed about the future strategies. W feels that one of its customers should be kept informed. Kept informed, numbers are in which quadrant? Kept informed is B, those that have a high interest but low power. W has adopted a keep satisfied approach. So keep satisfied to the government of J. Keep satisfied is which quadrant? So keep satisfied is C. Then we move on to the last one. W's employees are concerned about the possible redundancies at the company. However, they are not unionized. It looks unlikely that they will be able to collectively act against W. They are not unionized. They don't belong to any union. Are concerned about the possible redundancies at the company. However, they are not unionized and unlikely that they will be able to act collectively. So these ones, they have low power because they can't act, the employees alone, they can't act legally. And I think in this case, we can classify them as being, let me just check the concern about redundancies. So their concern there, I think we can classify them as D. They have no power and their interest is just on redundancies there. So their interest is low. So that is likely to be D. Number 5. According to Higgs' report, non-executive directors, they have 4 key roles within the company. So which are the roles? So remember, the non-executive directors, these are not actively involved in the management of the business. These ones are going to be just watching what the executive directors are doing. So the non-executive directors, they don't have an active role to play in the organization. So according to the report, which are the roles? So the non-executive directors, they should challenge the strategy. So the first role is challenging the strategy of the executive directors. So the first role has to do with strategy. The other role has to do with monitoring the performance. So the other role has to be monitoring the performance of the executive directors. Then the other role is also, they are supposed to come up with a risk committee that is supposed to monitor the risks that the organization may face. So the non-executive directors are also supposed to ensure risks stay low in the organization. Then the last one is they're supposed to, they have a people role. So they're supposed to be watching over what the people, those in the organization are doing, and also consider whether the reports to the general public are not misstated. So they check whether what we are reporting to the rest of the people is correct. Are we not lying to them? So those are the 4. Corporate governance requires the creation of a number of committees, including the audit committee. This one, it tends to verify that the transactions of the business are, if it's the audit committee, it verifies that the transactions are true and fair. Are there no errors? It also checks the systems, the control systems of the company. So it checks to see whether the control systems are working well. Are there no loopholes or weaknesses in our control system? So if it is the audit committee, is there to just ensure the systems are working well and there are no errors. Remuneration committee is there to decide the pay. So it's a committee concerned more in determining the pay for the executive directors. So the executive directors don't need to be paid more than how they have operated. But if they decide their own pay, they're likely going to pay themselves very high salaries. So it is through the help of the remuneration committee that we are able to decide the pay of the executive director. Then besides the remuneration committee, we have the nominations committee. So let's just highlight these ones in, summarize them in our Word document. So we have the audit committee. This ensures that The organizational controls are effective. Are effectively working. This ensures that the organizational controls are effectively working. This ensures that the organizational controls are effectively working, and there are no errors and fraud. Then besides the audit committee, we have the risk committee. This ensures that the organization is a sound system to avoid risk. Besides the risk committee, we have the nominations committee. So this helps, especially if you are deciding on the members of the board and the senior positions, who qualifies to be part of the board. So this helps, all right, in determining the right candidate for senior positions, such as the board. So who qualifies to be part of the board of directors? The nominations committee can assist with that. Then besides the nominations committee, we can also have, besides the nominations committee, we can also have the remuneration committee. So the remuneration committee, remuneration is pay. Executive directors should not be left to decide their own pay. So the remuneration committee, this decides the pay of the executive directors. This committee helps with deciding the pay for the executive directors. It is made up of non-executive directors. In fact, most of these committees are made up of non-executive directors. They're made up of non-executive directors. It is made up of non-executive directors. It is made up of non-executive directors, okay? So these are the committees that we have. Now with that in mind, let's go and try to answer the questions. So question number, we have the public oversight board. So the public oversight, this is just to make sure the public is kept aware of what is happening in the business. We need to be reporting how the business is performing, especially if it's a publicly listed company. We have to be reporting our financial statements. We have to be reporting our performance to the public so that they know how the organization has performed. So now let's look at the question. Company V is a large organization and wishes to monitor its impact on the wider society, obtaining information and feedback from key external stakeholders. would be the responsibility of what? We want to make sure we monitor our impact on the society, and who can be responsible for that? So that is the public oversight, because we want to make sure the public is happy regarding our activities. So that should be the public oversight board. Then select the role that appropriately fills gap 1 above. Then compare H. So company H is currently assessing the size and composition of the board of directors to ensure that it's appropriate. So the composition of the board, what decides that? Yes, Faith is correct. That is the nominations committee. Michelle is correct as well. So that's the nominations committee. Two types of rewards that can be offered to motivate employees are intrinsic and extrinsic rewards. So to motivate the employees, we can give them the intrinsic reward. If it's an intrinsic reward, you actually get it from doing the job itself. You are not handed over this reward by someone else, but as you do the job, you feel the reward. It's like the motivation that comes from achieving something. So there was a question that maybe let's say you are doing F3 and you find your seniors that are doing F7. There's a question that they're struggling with. Then you decide to help them. You might feel motivated that even if I write the exam, I think now because you've been able to help someone who is at a higher level than you. So you're motivated to even write your F3 exam because you feel like you are now able even to tackle some of the questions that are higher than your level. So that motivation you get, that is the intrinsic motivation. But if the motivation has to be derived from being given something by someone, that is an extrinsic reward. So something that you have to be handed over by someone, that is an extrinsic reward. So for each of the following rewards, identify whether they relate to intrinsic rewards or extrinsic. So a sense of enjoyment and accomplishment, can we say that is extrinsic or intrinsic? Yes, A, that's intrinsic. What about being given pay? Basic pay, is it intrinsic or extrinsic? Extrinsic. Company car? Extrinsic. Being given room to make higher decisions? That's intrinsic. That's how is the business and technologies. Herzberg argued that employees could be motivated by the way their job was designed. So employees could be motivated by the way their job is designed. He suggested 3 possible approaches to job design. So with job enrichment, job enlargement, the job rotation. So remember, we did talk about this, I think, Mashiro. So job enrichment, we are increasing the complexity of the job. Enlargement, we are increasing the tasks. Job rotation, we are just changing the departments where you work. For each of the following statements, identify which approach to job design they relate to. M works as an accountant in a large, they work as an accountant in a large company, accountant's firm. He usually only prepares the accounts, but he has recently been told that he will start undertaking client meetings, a role usually undertaken by his manager. So works as an accountant. He usually only prepares the accounts, but he has recently been told that he starts undertaking client meetings, a role usually taken by his boss. So is it not still the same department? It's a task that was being done by a senior. Now who's the cheat of that task. So in this case, they're increasing complexity, I think, to the task. Let's see the other answers. But this one sounds more of like, remember the case where I was saying you were teaching maybe O-level maths, then they add A-level maths to that. So it was a senior task that you are being handed over to do. So that one, it's more of, as long as it's still the same department, they've just increased the complexity. It's something that was done by the manager that you're being required to. Kay is well respected by her other team members. Her manager is therefore asked her to temporarily take charge of the team while he is away. Enrichment and enlargement is a tricky one there. Let's move to the third one. Then Elle works in the accounts preparation department for a large accountants firm. Next month, she has been told she will be second to the tax department to help her develop skills in this area. So she was in the accounting department. Now she's being taken to the they are now adding the tax to that as well. So in this case, they are saying they are working in the accounting department. Next month, she has been told she will be seconded to the tax department to help her develop the skills. This one, it could be some form of rotating because they've been in the accounting department. They're not adding, but they are being taken to the tax department. This one is a tricky one because the answers look. Jay has recently completed a large amount of data processing. His manager is therefore given him additional data processing to do, believing that this will make him feel motivated. So that sounds job enlargement. I think for 1 and 2, those ones are, let's take job enrichment. Then the last one, job enlargement. Then number 3 should be, if they are changing you from the department, unless if they are adding taxation to the department, then you can say it's enlargement. But if you are now being taken to the tax department, that's rotation. So rotation, you have to move from one department to the other. Enlargement, we are increasing the tasks that you have to perform. Then if it's enrichment, we are increasing the complexity. Okay, that marks the end for this one. Let's go to another one. I've sent the question paper in the group. Okay, so which of the following is most likely to be an example of a non-governmental organization? So if it's a non-governmental organization, what does this imply? So a non-governmental organization is an organization which is independent of government control. So already Michelle has said it's A. Yes, a charity organization is likely to be independent from the government. The police is part of the government. An accountancy partnership. A non-governmental should be not for profit, but still not under the government. The accountancy partnership, that one is a profit-making entity. It can't be classified under non-governmental organization. So partnerships are part of the private sector. When examining the external environment of organizations, you might use the PEST analysis. What does PEST stands for? So if you are looking at the PEST analysis, the P is what? So they're saying D is the answer, D is the answer. I think D is winning. So if the political, economical, social, and technological. So that's our PEST. So let's not waste time on that. What principle of classical approach to management is bridged by the matrix structure? So the good part about this, some of these things we already talked about them, but of course it wasn't in this manner, but we did talk about this problem, I think, sometime. So the matrix structure, I said we are more concerned about getting things done. So if you see something wrong, everyone can chip in and help. So what is challenged by the matrix structure? What principle is challenged by the matrix structure? What do you think? Waiting? Faith is saying A, and I support faith. So the matrix structure, it challenges unit of command because under the matrix structure, you'll be reporting to different bosses. There's dual command. So it challenges having unit of command. So you don't report to one boss. So the challenge is that you might receive two orders that are conflicting from two different bosses. So there is the challenge of dual command. So there is no unit of command. An organization may be divided into three levels. Starting at the top of the organization, which are these levels? So, which are these levels? C, is it C? A is the correct answer. Kudai is correct, Faith is correct, and who else that is correct? A is the correct answer. The strategic is the senior level, followed by the tactical, followed by the operational. I think this one we did. I think it's there on the slide that the additional notes that we did. Oh, it was not this one. Oh, here. Strategic, tactical, and operational. Let's move on. J Limited is considering implementing a new corporate structure. It has chosen a structure that maximizes its structural flexibility. It wants to be flexible, but with two sets of management, leading to dual command and increased conflict. I think we have repeated this. Which structure is this? Is the matrix structure. So vangonodzoswa question, but yambengeri question yawe yaya answer. Indeed. So that one is the matrix structure. That's where we have dual command. RPZ Public Limited Company is a business that has many levels of management. Each manager only looks after a small number of staff in order to improve control. Which of the following statements about RPZ is correct? I have already explained this. So please take note of those additional notes that I'm giving, because they pertain to crucial areas. And then one of these ones, they are areas that are commonly asked. So number 6, which of the following statements about looks after a small number of staff? So which of the following statement about RPZ is correct? So if it is a small number of staff, it means yes, I'm seeing a lot of A's coming through from those online. Yes, that one, it means there's a long chain. Because if there's a long chain, it's associated with a narrow span. This one. So there is a long chain. So there's a long chain which is associated with a narrow span of control. Then number 7, Hofstede looked for national differences in an attempt to find aspects of culture that might influence business behavior. Again, yesterday we did talk about some of these differences in culture by Hofstede. Which of the following is one of Hofstede's key dimension of national differences? I see a lot of B's coming through, and B is correct. We said some cultures, they have a high uncertainty avoidance. So they are afraid of making wrong decisions. Then let's move on. U Public Limited Company is launching a new product, the YG153. Normally sells its products at a premium, but sales of YG153 have been weak, with research indicating that it is too expensive for the market to be able to afford. Which aspect of pricing has you failed to consider? So you is planning to launch a product. I don't launch a new product. And you normally sells its product at a premium, but products at a premium, but sales of YG153 have been weak, with research indicating that it is too expensive for the market. So it is too expensive for the market. So if we are selling at a price which is too expensive for the market, what is it that we've failed to consider? Michelle is saying B. What are you also saying? If it's expensive to consider, it means we've failed to consider the customers. Michelle is right. And so you've charged a price maybe based on the cost, but you've not considered, are the customers able to afford? Because the sales have been low because the customers are not able to afford. Shane argued that corporate culture on an organization is initially influenced by which of the following? So culture, what can be the culture, what can affect the culture of an organization? So Shane said that, okay, I'm getting a B from Michelle. What influences culture? Getting a B from Coletta. So culture can be influenced by, yes, the first leaders of the company. They are the ones that can determine the culture, the ones that started the organization. And Shane also said that. Shane also said that there are three elements of culture. So there are three elements of culture. We have artifacts. We have espoused values. We have assumptions. So in culture, we have artifacts, we have espoused values, and we have assumptions. We have artifacts, we have espoused values, and we have assumptions. And the artifacts in culture, these are things you can easily see about the culture. So you get to a place, you don't need to ask, you can easily see this. These are the artifacts. So these are aspects of culture. Which can be easily seen. So the artifacts, these are the aspects of culture that you can easily see, even without being told. You get to a place, you can see how they dress. You don't need to ask, how do these people dress? So you can easily see how they dress. Those are the artifacts. Then there is a reason behind their behavior. So these are espoused values. What is it that they value? It can give rise to how they behave. So espoused values, these give reason for behavior. Espoused values, these give reason for behavior. So what you value determines how you behave. So these give reason for behavior. These give a reason for behavior. Besides the espoused values, we have assumptions. These are unspoken rules. When someone gets to a certain place, there is a way of behavior that they behave in without being told, but they simply assumed this is the way I'm supposed to behave. So no one has told you in this place, this is the way I'm supposed to behave, but you assumed. Okay, if I get into a class, maybe when you initially joined the online class, no one told you if you're in class, you have to mute your mic. But surprisingly, almost all of you did that. So it's assumption, it's a behavior you assumed. that I'm supposed to do this. So you get to a place, no one tells you to behave in that way, but you assume. So it's very difficult to manage assumptions. These are the hardest to manage because everyone can have different assumptions. So in culture, these are the hardest to manage. Well, someone might assume that turning off the mic is rude. I'm supposed to be responding to the teacher. So everyone can have different assumptions. And it's very difficult for people to have the same assumptions. So it's difficult to manage the assumptions. Number 10, which of the following rights of data subject is part of a typical data protection legislation? So which of the following rights of data subjects is part of a typical data protection legislation? So which right can we talk about? So right to access the data, right to free access of the data regarding the data subject, right to prevent. So you have the right to prevent your data from being used for direct marketing. So if you give the company your data, so you have a right to prevent the data from being processed for purposes of marketing. Okay, so we can resume from there. I have another lesson coming through 3, so I need to refresh a bit. So we'll resume from there tomorrow, but there is going to be a slight change to the timetable. Let me send the proposal in the group. Since maybe tomorrow is a church day, you can maybe try to find another time that can be a bit convenient for most of you. So for now, thank you so much for your time. Let's end here.